We are just 7 days away from Labor Day weekend, and we all know what that means. Back to school. Sorry, kids. Joining us now to talk about retail earnings in the back-to-school season, Wall Street Strategies equity analyst Brian Sozzi, plus Hitha Prabhakar, our own Hitha Prabhakar. They are all here. We're going to try to talk this through. What do you think? Are people buying? Brian?
They've showed up to the malls, surprisingly, and it certainly showed up within the second quarter earnings results from Target, Macy's. The retailers navigated the environment reasonably well, which is surprising, given all the headlines we've seen out there.
All right, when you say navigate, they're keeping their inventories low. Is that what you mean by that?
Retailers have kept their inventories low. That's been a key theme here. If you strip out the effects of currency, at the core, the units are low because there's still a lot of volatility within the consumer.
But Brian, I've been out there and I've seen so many promotions. Some of these stores are discounting up to 70%. Now, do you think this is a situation that's indicative of what we saw in 2008, these overly inventoried situations these retailers are having?
My whole contention here is there is an abnormal consumer spending recovery. In a normal consumer spending recovery, you don't see Abercrombie out there trying to sell jeans 50% off, and many of their competitors follow suit as well. It's not 2007, 2008 per se because they were caught off guard, but I think retailers are very mindful of what they how to position their inventory.
So back then they did have 50% sales. Right now?
It's still 50% off on certain basic items to get them in the store to buy a lot of the items that are inflationary in price because the consumer is getting hit over the head with inflation.
So is it loss leader items with the big discounts, but
That's
the
correct.
Basic stuff you need, like jeans, aren't getting sold?
Jeans are moving. They're moving because the discounts are there. But
I feel like on the American Eagle Outfitters call, they said that the jeans were a really big product mover.
The jeans were a product mover, and also some of their fashion items too as well. But I think there's still a lot of unknown. We got one key theme off of all these earnings reports lately. The retailers don't know how the consumer will respond to price increases. So they may be buying the cheap jeans, but they may not be buying the increased piece of apparel that was up 20%.
Now talk to me about Saks. A week ago, Saks beat, but they were very cautious on guidance. Talk about the high end.
Something happened on the high end. Normally, it takes about, I think, 3 to 6 months of prolonged stock market weakness to show up on the high end. What we're seeing now, I think, is the high-end consumer, they've been scarred. They remember what happened in 2008. Their counts went down the tubes. So I think they're making adjustments quicker right now.
Now, we were talking about back to school just a little bit ago. A lot of these retailers were saying they were seeing some strong back to school numbers. Is this indicative of what we're going to see going into holiday?
No, and I don't know, really, to be honest with you, how holiday is going to pan out right now. And if you looked at some of these earnings calls from retailers, they didn't really mention holidays at all because I don't think they know how it's going to turn out anyway. Back to school, we have the same-store sales results out next week. There could be a little disappointment in there. Something happened in August within the consumer confidence numbers. They plunged, and I think it showed up in the malls.
Container shipments coming from Asia have been much lower than in years past. It's also a lot cheaper to ship as a result. In other words, they're not building inventories for the holiday season. Does that concern you? Might they miss the boat if the economy ticks up?
I think it's in their best interest to keep inventories low at this point. They have to make a trade-off. That's what retailers do. You either bet on the future or you try to live in the present. And right now, they want to match their supply to demand the best they could.
All right, what do you like? Which names?
Target and Hot Topic. My key theme here, I still underweight retail more broadly. I just don't know how the consumer is going to act month to month. Stay what's working. I don't want to pick turnaround plays. One is Target, sales are accelerating. The other one is Hot Topic, you're taking share.
Now, I just saw your Tiffany note. I know that we're talking about back to school here. Tiffany has been known to sort of beat out in terms of pricing power. Do you think that they're going to be able to sustain that, given the price of gold rising and given the price of diamonds increasing as well?
Well, this was a blowout quarter from Tiffany. I mean, to beat by 17 cents and pretty much break the trend within retail right now, which is some of these late quarter earnings misses, I think they will continue to show pricing power. Within the Tiffany's results, there's nothing in there that tells me they've been unable to pass along price increases to their customers, whether it's Europe, Asia, or the Americas.
10 seconds. Tiffany up $2-3 this morning. Do you buy it?
I do buy it at this point. I can make a case that Tiffany could reach $100 a share. Sure, there's some aggressive assumptions around that, but pricing power, strong moat around their business, sign me up.
All right, Brian Sozzi, Wall Street Strategies, thanks for joining us, keeping us updated.